It's like a modest rainstorm. Remember, having a day where you get some drizzle, that's not the same as being in a typhoon or a hurricane. Okay. So we're probably not going to get an economic hurricane, but we probably will get a recession. And I'm going to lay out some things to kind of let you guys know where this recession is likely going to come from, what it's probably going to look like, and some of the signs that economists are pointing to say that there's a recession. First thing I'll also say too is, as an investor, recessions are great opportunities for you to actually make money. That's the best time in the world to be an investor. The best time in the world to be an investor. It is the best time in the world to be an investor because, well, why is that? Well, because the fact that you're an investor, the fact that you're thinking about wealth and building wealth and all that, well, think about it. Let me ask you this. Do you think that most Americans are thinking about the future? Do you think that most Americans are planning for the future? Do you think that most Americans are investing for the future? Give me a yes or no. Do you think most Americans are putting money to the side consistently to prepare? Do you think most Americans are kind of even believe that investing is possible and doable? Give me a yes or no. What do you guys think? Right. So Thomas, Thomas and Elhaj, you're right. Most people don't do that. Like if you look at your own family members and you look at how many of your relatives are saying, okay, I need to sacrifice today so I can have more tomorrow, or, the conditions that exist now, they're going to go away eventually and I need to be ready for the future. It's 2023. I need to make sure I'm ready for 2027, 2028, 2030, whatever. A lot of people can't do that, and it's not even now, no, in some cases, it might be because they're just struggling so much. And sometimes when you're struggling, you have to focus on solving the problem in front of you and you can't think about problems that you might have, 7-8 years down the road. So I get that part, but some people are not even in the struggle like that. Some people, they get a spare moment. They want to go to the club, or they want to hang out. They want to go get drunk. They want to just watch Netflix all night. Right. So, because remember, guys like me are always available talking about financial literacy and investing and all that. It's not like you don't have access to the information, but when giving the choice between sitting through a conversation about your economic future versus watching something exciting on the Disney Channel or on the Disney streaming service or Netflix or Hulu, entertainment will always tend to win. So the reason that recessions are an opportunity for you is because when the recession happens, this is always true. Everybody's going to panic. People are going to freak out because they're going to be worried about losing their jobs. They're going to be worried about their stock portfolios dropping if they have 401ks and all that. They're going to start looking to do the exact opposite of what you should do during a recession. They're going to just start panicking and freaking out. And really it makes me think about even I'm going through, as you guys, I told you guys, I'm actually training to become an airplane pilot. And the worst thing you can do during a disaster or during an emergency is to panic, right? The first thing they teach us is don't panic, go through your checklist, check the carb check the, check the engine, check the blah, blah, blah. But if you panic, you're only going to make it worse. So when the recession occurs, and it's probably coming this year, when everybody panics, a couple things that are going to happen for sure is that you're going to see stocks drop because people are going to start selling their stocks. You're going to start seeing a precipitous decline in what is called investor sentiment, where people are just not going to have an appetite for stocks. It's kind of like with crypto right now. You're going through a crypto winter. That is your opportunity to go ahead and get positioned for what's going to happen next, which is the recovery. The recovery is going to occur. That's when people get rich. So when everybody's unloading their assets cheap, that's when smart Wall Street money comes in and they scoop up everything. They buy it all up. Just like how they went to Detroit when nobody wanted to live there and they bought all the houses in Detroit because they said eventually this will pass and eventually these houses will be worth a lot more. And then we'll be sitting there, we'll be waiting for the money when it arrives. To get money, you can't go chase money to get money. Chasing money does not get you money. The only way to get money is to be there when the money gets there. Right. So if you're out chasing the money, that means you're following the trend. That means you heard that the market's going up. So you go start investing after you heard that the market's going up, which is too late because by that time, everybody's already bought everything and all the good stuff is gone. Everything's super high priced by that point. Right. The smart people that get the money are the ones who are just sitting there waiting for the money to arrive. So if you are a smart investor, you don't chase money. The money actually chases you, because you get positioned in the places where there appears to be no money and you just sort of wait out the storm. And then eventually when the tidal wave of money arrives, you're just sitting there ready to receive it. Okay. So ultimately, the factors that I'm seeing right now that tell us that we're going into a recession are that there's some stuff going on with the unemployment rate. Right now, the Federal Reserve has been killing the stock market by basically, they've been killing the stock market by basically pushing interest rates up. They keep on pushing rates up. And as these rate hikes are occurring, it's just murdering stocks. And I know it's really brutal to kind of observe. It's kind of tough to go through this. But this is necessary to keep the economy from going into hyperinflation. You do not want hyperinflation. It is terrible. It's what Argentina has experienced. Countries like Germany experienced it during World War II. Zimbabwe experienced it. Hyperinflation is just horrible. So what they're doing makes perfect sense, but it's really, really brutal and really, really painful to have to deal with. Now, as the rate hikes come to an end, which they're probably going to come to an end later on this year, eventually at that point, you should see some market increase. Now, what is going on though that's interesting is the debate is whether or not the economy is how the economy is doing right now. So they keep increasing interest rates, thinking that the economy is going to start to slow down, start to dip a little bit, but instead the unemployment rate has remained really resilient. You have actually the lowest unemployment that you've had in maybe 20 or 30 years or something like that. So they're thinking that unemployment rates are low. But I saw not a presentation, but an interview with a guy who said that the Fed is not getting good data, basically. He said that the Federal Reserve, the way they get their information about the economy and the unemployment rate is they send out these surveys to these different, companies and institutions to say, okay, are you hiring? Did you lay anybody off? Like, what's going on? And then they come out with these layoff numbers that everyone pays attention to. Well, he's saying that these surveys are not being filled out for some reason right now. I guess, I don't know, because companies are having a hard time or whatever. I don't know. But he said they're not getting good data. He also said that companies don't just do layoffs in order to cut costs. Sometimes companies do a lot of what is called quiet firing. So let me give you an example. Have you ever seen a situation where your boss just made the job so they started putting all these new restrictions on you and these new rules on you, and maybe they even give you a pay cut, and then you just get so mad that you eventually just leave because you can't you can't function under the new system. You're just like, this is stupid, this is outrageous, I'm out of here, right? Well, a lot of times companies do that deliberately because they don't want to lay you off, because layoffs have a stigma attached. When companies lay people off, it makes the company look weak. It undermines employee morale. It's easier for a boss to tell the other employees that so-and-so voluntarily quit than it is for the boss to tell the employee that we took this really hardworking person just like you and we just chopped their head off right in front of you. We got rid of them right in front of you. And then next thing you know, everybody's scared, like maybe I'm next, maybe I should start looking for another job or, whatever. So that's one thing. And then the other thing they mentioned is that a lot of companies, what they'll do is instead of actually laying off the staff they have, they'll just do the opposite. They'll do something similar, but not the same thing. They'll just stop hiring new people. They'll just say, you know what, we were going to hire 1,000 new people next month. We decided to go ahead and put that off for a while. So they do a lot of slow hiring. So what was being argued is that these are also indicators that the economy is going south, that the unemployment rate is creeping up higher and faster than we thought, and that you shouldn't read too much into what they're saying right now about the state of the economy. Okay, so that unemployment rate is kind of an issue. Corporate earnings are probably going to sink. And as corporate earnings sink or earnings expectations sink, or companies start to come out and start to reveal information to say that their economic headwinds are not good, then that's when you start seeing that dip that occurs in the market. And that's also where you start having these realizations that maybe we're in some kind of a recession, because that's happening in conjunction with the Fed rate hikes. Inflation, now here's the good news though. Again, this is why I'm completely convinced that by 2024 and beyond, maybe 2025 at the latest, you're going to really just see a roaring stock market. Is because inflation is pretty much under control now. Inflation was the big beast that was beating you up all last year, that was causing you to lose money in your stocks. There are some companies like Silvergate Capital, and I talked about Silvergate, so I'm going to talk about that again today. If you're in the Prime program, the Silvergate was one of the companies that that I was invested in, that I was selling stock options on. So I've made a lot of money from Silvergate. But as you know, Silvergate has a lot of exposure to the crypto space, which is causing some problems. and you win some, you lose some, right? Like, for example, same week we have Riata Pharmaceuticals that literally more than doubled in price within 1 week. So that's investing, right? Some companies you invest in do great. Some of them don't do so great, but you kind of keep at it, right? So ultimately what I would say is that if you're able to sort of hold your nose and wait about a year, you're going to see some really great movement in the stock market. So if you're not consistently investing, one thing you may want to consider is doing something like investing, $30, $40 a week, $100 a week, whatever you can afford, and putting it in maybe in some kind of S&P 500 fund, like VOO is a ticker symbol for the Vanguard S&P 500 fund, VOO. That's what I recommend for the $5 a day investing plan. But you want to have some assets positioned so that when you start to see that rise again, you'll be able to benefit from that rise. Remember, people that make money are not the ones who chase money. People that make money are the ones who position themselves so that the money ends up chasing them. Maybe, in a way, maybe it's just like dating, right? If you go out and you're desperate and you're chasing around every pretty girl, or you're chasing around every handsome man, it's going to be harder to find the right person than if you simply make yourself attractive and appealing, put yourself in the right situations, and then let people eventually chase you, right? So money is kind of the same way. So don't go chasing money. Don't go following trends. Don't go following the crowd, because the crowd is usually wrong. All right. So, all right. So now in terms of stocks to consider buying, let me see. I'm trying to remember the companies. If you log in at the blackstockmarketprogram.com, I made a list of what Dr. Boyce is buying. I do that every week for you guys. So log in at theblackstockmarketprogram.com, theblackstockmarketprogram.com, the list of what Dr. Boyce is buying. I made a list last week. I'm investing in some Chinese stocks right now. I know NEO's down a little bit. That might be an opportunity in terms of investing. And there were some others. I can't remember everything because I find stocks for you guys and then I buy them and I just accumulate stocks, just like shoes. I just throw them in the closet and then check on them a year later, 2 years later. All right. So what I'm going to do today also is I'm going to answer some of your questions. And also, I want to remind everybody, don't forget that I'll be in Los Angeles this week. If you want to meet in person and talk in person, I'll be in LA March 10th and 11th for a 2-day Black Wealth Bootcamp. So if you'd like to join us for the Black Wealth Bootcamp, just go to my website, boycewatkins.com. We're going to cover in detail my new book, The 10 Commandments of Black Economic Power. I'll give you materials and an implementation strategy to implement these ideas into your space. It's designed to build generational wealth in a team framework that will allow you to really just sort of skyrocket past everybody else. It's very easy to do, actually, if you approach it the right way. In fact, actually, I'd been thinking about, I'm done anything about CAS, the Chinese stock. El Haj, I don't know anything about that stock, but if you log in at the blackstockmarketprogram.com, there's a link where you can leave your questions for me to answer in class. And I'll answer that question during class so we can kind of talk about it. I have to research the company because I don't know because there's literally so many thousands of stocks out there. You can't memorize every single one of them. So I don't know anything about CAS. I do know I like NEO, but there's some others out there. Alibaba, that's another good Chinese company. Also, I'm going to make a list of AI companies that I really like that you may want to look at. I'll make that list this week and I'll put it in your course materials. So if you log in at the blackstockmarketprogram.com, you'll find all that information there. And also to come to the boot camp in LA, just go to boycewatkins.com. And in addition to that, you can also get the $5 a day investment plan, which I really want everybody to consider implementing because this is more of an intergenerational play. Your kids don't actually have to work for anybody if you prepare in advance. Now, if you don't prepare, your kids are going to have to become slaves for somebody else. They're going to have to work for somebody else. But if you prepare, when they're like under the age of 10, then you can actually position them very easily to the point where they never have to work for anybody. So I would encourage you to consider giving that gift of freedom to your kids. White people are not going to give you the gift of freedom. That's not their job. It's up to you to decide if you want to give that gift of freedom to your kids. The Clear Underground Railroad financially to do that is a very easy plan that I put together for the Black community called the $5 a day investing plan. So it does not mean I'm asking you to send me $5 a day or something like that. Some of these other plans, no. This is you giving yourself $5 a day of investing in the stock market so that you can be an active participant in the growth of the American economy and put your family in a position that exceeds almost anybody else. So it's easy to do. You can go to boycewatkins.com. The only thing I'm asking you to do is stick with it. Do invest that $35 a week on autopilot. If you have more money, then do $100 a week or $200 a week. It'll grow that much faster. But then number two, I'm asking you, don't sell those stocks. Buy those stocks for your kids. Give them to your kids when they're 25 to 30 years old, not sooner. And even then, don't give them all the money at one time because because they have to be financially intelligent enough to preserve resources. A lot of people don't know that most wealthy families lose all their wealth within one generation. The reason they do is because they give all that money to their kids and their kids go do stupid stuff with it. So what you do is you put it in a trust so that the trust has certain rules and the kid can only get access to a little bit of money at a time. And the rest of the money is behind a wall where it's going to be growing consistently, almost like an endowment. Universities, that's how universities function. They have an endowment. They have a big pile of money that allows them to pay bills or to deal with rainy days. Corporations have an endowment. Rich people have an endowment. Your child should have an endowment. So the way to kind of visualize this is imagine if you're going through life and you're dealing with life. You're dealing with the ups and downs and the choices that people make. You're buying house, buying your first house and relationships and whatever. But then imagine if you're backed up by an army of dollar bills. Like you got an army of $250,000 bills. So you got $250,000 in liquid assets that backs you up as you're going through life, right? So what does that mean? That means you don't have to work for anybody unless you want to. It means that you have a wide range of economic choices you can make that a lot of people can't make. Everything from buying the car you want or going on vacation all the way down to starting a business, buying your first home, not going into student loan debt. And what that does is that increases your quality of life. Also, the other thing too is that when your child is endowed, they have the ability to not just to function as their own bank or to function as a family bank where they can, if they have other people in their family that have economic distress, they can come through for those individuals, but you have to operate on a certain code of conduct that is what's the word? That is, I'll say, I can't find the right word right now, but that is conducive. Here we go. That is conducive to the preservation of resources. That's what that new book is about. The 10 Commandments of Black Economic Power is about how you form your economic team, but you have to do it almost like gang affiliation. Gangs cannot succeed. And I'm not talking about just street gangs. I'm talking about gangs like Apple Computer. Apple is a gang. Gangs are groups of people that operate with a common objective and under a specific code of conduct. And if you deviate from that code of conduct, you get removed from the group. The European Economic Union is a gang. NAFTA is a gang. The police department is a gang. The government is a gang. Gang affiliation occurs everywhere. Anytime you see a group of people working together as a collective, you're seeing a gang. Whenever you see a group of geese, even animals understand that gang affiliation allows them to be safer. That's why they run in herds. They don't run by themselves a lot of times. A lot of animals will only run with the pack, right? So ultimately, when you form your pack and you form your gang, you have to have rules that are conducive to wealth preservation that also create trust. Trust is a very important part of building economic systems. If I don't trust you, if I think you're going to rip me off, if I think that I'm going to loan you money and you're not going to pay me back, then I cannot trust you. Right? How many of you have family members that say, that's why I don't loan money to relatives, right? Or cousins you would never loan money to because you know that they'll never pay you back, right? Little things like this that we go through that we think are just sort of normal, that's just part of being Black. That's not the way it's supposed to be, because what happens is every time your cousin borrows money from you and does not pay you back, that is traumatic. That is financial trauma. Right? Again, we have the first ever Black financial therapy department in the Black Business School. So we have real life, highly trained professional therapists that help us deal with things like financial trauma, financial anxiety, a lot of the things that we experience that kind of hold us back. And financial trauma means that trauma sticks in your memory. So the next time another relative comes along and says, hey, I got this great business idea. It's totally legit. We can make a ton of money. You're going to say, I don't know if I'm going to do that because I remember when I loaned money to cousin so-and-so, and he didn't pay me back, right? And this happens all the time. Everybody feels it. I made an investment in a Black business right here in this community, in the conscious community. I put up some money, and it was a substantial amount of money. We made an agreement on how the deal was going to go. They didn't pay me back. So then somebody else came along and was like, hey, Dr. Boyce, will you invest in my project? And I'll admit, I was kind of affected by that. I was like, man, I want to help, but God, I don't want to put my money into stuff that where somebody's going to just tell me one thing and then do something completely different. So everybody feels it. I even feel it in the position that I'm in, right? So what that does is that shuts down your economy, right? And when trust is gone, the economy is gone. So the 10 Commandments of Black economic power is about sort of understanding how these dynamics work and how in your space, with your family, with your group, whatever it is you want to work with, you're able to develop the trust and the systems in place to allow you to feel comfortable supporting each other, knowing that you're not going to get screwed, right? And that opens all kinds of doors for tremendous economic possibilities. All right. So the next thing I wanted to mention is part of the reason that they believe inflation is going down is because housing and energy prices are going down. There's evidence of that. The cost of rent, believe it or not, has actually been on the decline, and which is a good thing, right? They're basically saying that that landlords are kind of dealing with the fact that there are people that are concerned about the high cost of rent right now, and they're doing things like moving back home or whatever. And then also you have a supply issue where a lot of people, because the cost of rent was going up, a lot of companies were buying houses. Like right now, all across the country, corporations are buying thousands and thousands of houses. And that's kind of caused, sort of an increase in the supply of rentable property. And so right now, housing prices are going down. Energy prices are going down. Those are two big components of inflation. That's very good for your portfolio. Well, once inflation kind of gets dealt with, you'll find yourself in a position where your stocks are going to do well. All I'm doing is just waiting for the egg to hatch. It's going to hatch. So whenever I see things kind of go down even further, I just buy more stuff. Like that's just kind of the strategy that I'm taking right now. But you obviously have to be selective about the companies that you pick. So if you log in at the blackstockmarketprogram.com, you can find the list of stocks that I like, the stocks that I'm buying right now. What Dr. Boyce is buying. Let's see here. Somebody says what Dr. Boyce is buying shows up to 221.23. So that may be, you know what, Gwen, that may be the last list that I put together. I thought that I did one. I've done one since then, though. So let me double check that. But either way, though, here's the other thing you should know about that list. So when you log in and you go to what Dr. Boyce is buying, what you'll find is you can go back a month, 2 months, 3 months, 6 months, and find stocks from 6 months ago that I recommended or that I like that are still good investments, right? The thing is that these companies were chosen because they were good 3 to 5 year companies. They're not just companies you want to buy and flip in a couple of weeks. These are companies that can last where the investment, this is 3 to 5 year range. That's what we're looking at, right? So if you go back 2 years, the companies that I picked 2 years ago, I stand by those companies now. Sure, there's going to be some companies in there that don't perform the way you expect. That's how investing works. But most of those investments in there are still good. So unless you bought every single one of the stocks every single week, if you find that you're not getting as much as you want for that particular week, just go back a week or go back 2 weeks. And there's a whole nother list. I put about 5 or 6 in there every week, about between 4 and 6, depending on what I find in my research. But I am going to go do research and grab a few more for today. For some reason, I thought I did a week ago, but maybe not. So my apologies for that if I skipped a week, but I'll go and take care of that today. All right. So the other, let's see here. One other thing that is happening right now in the economy that is leading people to believe that there is a recession coming is that there's something called the manufacturing PMI, which is kind of like this survey that they do to determine how the manufacturers feel. And that is predicting recessionary conditions. And so when they look at the recession, they're predicting it can happen maybe the second quarter or the third quarter of this year. And so that's what they're saying. Now, let me see here. I'm looking just, I took notes because I want to make sure I cover everything with you guys. Let's see here. Okay, so we talked about unemployment and cracks in the job market and how companies are slow hiring and quiet firing and things like that. All these things are kind of indicators that you're going to see an issue with unemployment at some point, right? Yeah, I think that workers in this country, there was a year ago, you could kind of write your own ticket because there were jobs available everywhere. It was also causing wage inflation because companies had to pay more money to compete with the to compete with other companies. And so it was making it hard for them to fight inflation because the cost of hiring people was going up. That's changed now with big layoffs in the tech industry and then layoffs in other industries. The unemployment issue is kind of creeping back in. There's an issue with sentiment, consumer sentiment. You may not know this, but let me reiterate this. The biggest driver of economic activity in America is actually consumer spending. That's why the conspiracy theorist in me believes that part of the reason that you're trained to consume and to buy things at an early age is because they need you to be a consumer for the economy to grow, right? And that's fine to be a consumer, but you can't just only be a consumer. And this also challenges or affects me as a Black man because Black people we're the most wired to consume. That's why integration happened. They said we need more consumers. We need people to buy more products. So Ebony Magazine and stuff. They made these videos like how to sell to the Negro and things like that because they want you to buy stuff and they want you to define your quality of life by the stuff that you bought. And you know what happens when you buy a bunch of stuff? You end up going broke. You run out of money. So ultimately, when you start to see those cracks in the economy, when the unemployment rate starts to rise a little bit and it becomes tougher to get a job, you're going to see consumers buying fewer products. That's going to be another indicator that kind of slows down the economy and causes that recession. Because when consumers are buying fewer products, well, guess what? Corporations are hiring less people. Corporations are not making the same level of investment. Their earnings start to drop. So all these things kind of work together. They're all kind of deeply connected. And just, on a personal note, in terms of how to view this consumer thing, first thing you should understand, in my view, is that you don't have to feel bad for being a consumer. All of us consume things. All of us buy stuff. There's nothing wrong with buying things. One of the things I want to reiterate is during the Black Wealth Bootcamp that we're doing in LA, March 10th, is that you can create your own economy. A lot of people don't even know this, that you can actually create an economy within your family or within your circle or within your investment club. So even if your relatives aren't any good, you can jump in an investment club and create an economy, but you have to understand how to build that, right? Just the same way you build a car or the same way you can build a bicycle, right? And so part of building your own economy means that you understand that you need consumers for the economy to operate, but you also need producers for the economy to operate. And in order for you to be a functioning member of any economy, and this is important for Black people to understand, you have to be a consumer and a producer. You can't just be consumer all the time. Or to make a functioning economy, it's okay to be an employee, but you can't have the whole community be employees. If Black people are nothing more than employees, then who are going to be the employers? Well, the employers are going to be people who are not Black, who are extracting wealth from Black people. And so a lot of this links back to questioning very sacred ideas that we have about things like integration, because my belief is that you were integrated into this economy to be a consumer, to buy products from other people, to be an employee. That's why the majority of Black people raise their children to go get jobs. And you also, on the capital market, you weren't integrated to be an investor and an owner of capital. You were integrated to be a renter of capital, right? A renter of capital or a person seeking investment, right? So think about how many times you hear people that will define success, right? They'll say, so-and-so's doing really well. Well, why is he doing well? Well, he got a real good job, right? Not he owns a great business, but he got a real good job. How else is he doing well? What else makes you think he's doing well? Oh, he got a nice car. You seen that, man? You seen that Benz he's driving, right? So he's a consumer, he's an employee. And then also, and I went to his apartment. It's the nicest apartment out there, and he's paying rent. Give me a guess if you understand what I'm saying. So think about this. So think about this. You have this image that a Black person is successful because they got a good job, they're buying expensive stuff, and they live in an apartment where the rent is very high. There is nothing about that description that I've shown you that indicates that this person is in any kind of position of financial security, right? They're not in the position. Financial security means that not just that you have a good job, it means you're in a position to create jobs for other people. Financial security doesn't mean that you can go out and just buy consumer products. It means that you're selling things that other people are buying also. Financial security, it doesn't mean that you're renting a nice place. It means that you own the building and people are paying rent to you. I own property. All of my tenants pay the mortgage for me. It's not because I'm trying to be oppressive. They want to pay. Like I feel bad. Like they want to pay me rent because they want a place to stay, and I don't mind that, but I feel a little bit, I ain't gonna lie, I feel a little bit guilty about it because I'm like, wow, this is the easiest thing in the world. Like I just go get the money to buy the property, and then somebody will pay the mortgage for me. This is capitalism, people, and it's important that you teach that to your kids because you don't want them to be on the wrong side of that deal. I paid rent though, like I paid rent in my life, and also there are ways to kind of alleviate some of that guilt. Like, so for example, one thing that me and my wife do is we don't charge market rent for our property. We don't care if we can get an extra $500 out of the tenant by increasing the rent to market rates. I look at the cost of the mortgage and I say, does the rent cover the mortgage and then any extra repairs we got to do? If the answer is yes, then whatever, who cares? Right? Because I know that we're winning. We're getting the capital gains. We're getting all kinds of other stuff, right? So you don't have to be a hardcore capitalist. But at the same time, though, you have to understand capitalism well enough to know that that's what you're dealing with. That's what you're competing. Don't sign yourself up. Don't sign your kids up to be suckers. Don't sign your kids up to have the economic blood sucked out of them. Sign them up so that they understand how to give a little and get a little, right? You should be giving and receiving, not just being the giver. Right. So now one thing I wanted to talk about, and somebody asked a question that I thought was interesting. Somebody asked a question about Silvergate, and they said, is Silvergate a volatile stock? Yes. The thing about Silvergate is that we knew Silvergate was a mess when we bought it, right? When I bought it, I knew Silvergate had problems. Silvergate is heavily linked to FTX. They're linked into the crypto space. They are what is called a crypto-friendly bank. Silvergate had a lot of issues, and what really drove Silvergate's price down, Silvergate Capital, what drove their stock price down is they did something that was pretty much a cardinal sin in finance. They delayed the release of their financial information because they said they have to determine whether or not they are viable as an ongoing concern. And before that moment, Silvergate was the most shorted stock on Wall Street. Now, I own Silvergate, and I did short Silvergate. I had put options on Silvergate. We talked about that in Prime Class. If you go to Prime Class, where we make money selling stock options, I talked you guys through my position on Silvergate, why I own Silvergate, but also why I bought puts on Silvergate and why I sold calls on Silvergate. All of my positions on Silvergate were pretty bearish, meaning that I knew that this was a company that could kind of pop off and do something terrible. So when you know this, it's almost like doing business in a dangerous neighborhood. You just have to make sure that if you go there and you make your money, that you have metal bars in the windows and you carry a gun or something. So with Silvergate, the company is kind of struggling right now. There's opportunities, honestly. I'm not saying to go buy this company at all. I'm not telling you to invest in this or at all. I just, again, in the Prime program, drboyceprime.com, and you can learn more about my website if you want to take a look at it. I just tell you guys what I'm doing and how I make my money. It's not really an endorsement. It's not really me telling you that some things can't go wrong. It's me saying, this is what I'm doing. This is where I'm generating my income. And so what happened with Silvergate was I bought a bunch of shares in Silvergate. I also bought a bunch of puts to protect my position. Put options on what you buy it's like insurance, basically. You buy a building, you get insurance on the building. Thank God I had some insurance on Silvergate because that stock really collapsed. But then the other thing that I did was I didn't buy the stock because I was expecting it to go up. I sold the call options on the stock. And I don't know who bought those options. I guess these are people that thought the stock was going to go up. I don't really go chasing waterfalls. What I do is I buy into things that where I immediately take on a bearish position in certain situations and collect the cash. So Silvergate's call options were very attractive. They were extremely high priced. So I was making a few $1,000s a week by selling put options on or call options on Silvergate. Now, Gene is asking, am I sticking with Silvergate and buying the dip? Will they be around next year? Nobody knows if they're going to be around next year. But let me just say this. I've noticed over time that a lot of the companies, like the Carvanas and some of these others that look like they could die any moment, a lot of them have survived. The AMCs. AMC, I went to AMC movie theater, me and my wife. The theater was it was a big, beautiful theater. We were the only two people in the whole damn theater. We went to see Ant-Man, a blockbuster movie, and we were the only two people there. So AMC, I have no idea how AMC stays in business, but they do, right? And it's crazy because there are people that have invested consistently with AMC stock and been making money with it. So with Silvergate, am I going to buy the dip? I don't know. I will say this. I'm going to hold my position. That's what I'll say. I'm going to hold my position. Why? Well, because every week I sell my call options. My goal is to make my income. What has happened since Silvergate Capital dropped is that the price, the value that I could sell my call options for has skyrocketed. I mean, because there are a lot of people, because what happens is when a company drops like that, it's like you just have this what's called information dispersion. You have a bunch of the investment community thinks it's going to keep going down, so that increases the price of put options, right? Because people are selling puts or whatever, and they're short selling the stock and all this, and with downward pressure. But then you also have people that believe it could pop back up at any moment. So they're the ones who will bid high prices for the call options. I sell the calls. So one of the things that we talk about, when it comes to investing in general, or in specifically in the Prime program, when you're talking about generating income from your stocks, it's like you don't want to keep second guessing your strategy based on what just happened yesterday, right? So what you have to do as an investor to keep from driving yourself crazy, this is part of the investor psychology stuff that we do in the Black Financial Therapy Department in the Black Business School, is it's best to pick a strategy in advance and just stick with it. Just stick with it. So if your strategy says, look, these are the companies I'm going to rock with, I'm going to make my income from these companies every week, whether they go up or down, I'm going to generate my income, then that's what you stick with, right? Good or bad. I pick my wife. I don't pick a new wife every time my wife gets on my nerves. In case you don't know, anybody in here who's married will tell you that marriage ain't always a picnic. Marriage ain't always a honeymoon. It ain't always, every day ain't a beautiful day, but you don't go pick a new spouse just because your wife or your husband made you mad that day, right? So, the same way I rock with my wife, I rock with my investment strategy. So with Silvergate, it's part of my portfolio. I can generate more income next week from the stock than I generated last week. It worked because that's my goal in selling call options, is to generate consistent income that I might use to pay credit card bills or whatever. And then we'll just see what happens. Am I going to buy the dip? Janine, did you ask that question? That was a good question. I don't know if I'm going to buy the dip. I got to think about that. Whether I buy the dip is going to come down to how much of my portfolio is committed to Silvergate, right? So I'm not going to, because on one hand, if this stock recovers, I mean, it's going to be dramatic. One thing about investing that people don't know is that sometimes the worst companies can be your best investment. Everybody knows what a good company is, right? Everybody, like Apple, everybody knows Apple's going to make another $1 trillion, or whatever, 100 billion or whatever they make every year, right? So Apple is a good company, but Apple is not in my portfolio at all. Or maybe if I do own some, it's like a little bit. Why? Well, because Apple, everybody knows how great Apple is. Apple's not going to surprise you and suddenly make a ton of money or suddenly increase, 20, 30% in value. Sometimes it's fun to kind of deal with the stocks that are kind of teetering on the edge a little bit. Not that you want a whole portfolio full of those stocks. And also, risky companies are only interesting if you're able to really stomach the risk and be okay with that. So if you can't be comfortable or functionally process the volatility, the Bronco ride, then you probably want to stay away from companies like a Silvergate. When we talked about Silvergate last week in Prime class, I was mentioning to you guys that Silvergate is one of the riskier stocks in the portfolio. And we mentioned that going in. So what's going to happen next? I don't know. I'm going to be watching. I'd be very surprised if the company just disappeared, though. I think It's just interesting how these companies find a way to survive. So I don't know where it's going to go at this point. All right, so let me hop in, and now here's the other piece too with a company like that. Part of what saved my portfolio with Silvergate was I bought put options, and I bought these put options that had a strike of like, I don't know, $6 or something. And this was when the stock price was up to like $13, $14 a share. Those put options were not that expensive at that time. Now, those same put options are extremely expensive. So again, just like I was saying to you before, you can't go chasing money. You can't react to the disaster after the disaster has occurred. You don't buy umbrellas after it starts raining, because then the price of umbrellas goes way up. What you do is you buy your umbrellas when it's sunny. So whenever, whatever investors are thinking, whatever the majority of the market's thinking at a given time, I tend to be thinking the exact opposite. So when the market's doing well and everybody's thinking about how great things are, I'm thinking about when things are going to go bad, because I know it's going to eventually go bad. So I start saying, okay, maybe this is a time for me to buy my put options. Maybe this is a time for me to protect my portfolio. Put options and call options are basically things, if you're interested in options and you don't understand them, just go to stockoptionsmasterclass.com. I have a whole training on stock options. You can feel free to take a look at it. It's stockoptionsmasterclass.com. I did a whole weekend event, and we recorded everything. So stockoptionsmasterclass.com, or you can just go to my website, boycewatkins.com. There's a lot of stuff there on that. So just remember, you always want to be thinking a step ahead. You don't want to sort of just do what everyone's doing and see what everyone else is seeing. When things are bad, you want to imagine that things are going good. When things are good, you want to imagine when things are going bad. Hassan says, Brother Watkins, what percentage do your students make in income from weekly, monthly income in the prime class? It depends. It depends on how much risk you put into the portfolio. It depends on what you buy. I just tell everyone, I have what I call Dr. Boyce money makers, and I list what I own, and I give a description of the stock and how I feel about it. And then people do what they choose to do. We've had some people that are, I encourage you to talk to people that are in the program, right? Like, so maybe if you're in the prime program, if you're in the chat, feel free to share what you've learned and what you've seen and what your experience has been. I don't want to be, I can't tell you exactly what everybody's earning. I can tell you that I earn the majority of my income from selling stock options. That's how I make my money. So, that's why I like it enough to talk about it. So when the team is losing money, I lose money. When the team is making money, I make money. One of the more exciting stocks that we talked about 2 weeks ago was a company called Reata Pharmaceuticals, and Reata Pharmaceuticals doubled last week. And so a lot of students were very happy because they had bought shares in Reata, and they were selling the options, but they were still able to benefit from the upside. So it's up to you. Let's see here. All right, so Larry Brown says, I bought 1,000 shares of Silvergate and not folding. Should I consider buying more shares? Larry, I think it depends on your cash flow position, right? So if you are trading on margin, be really careful about margin calls, because so you may want to keep some cash back to kind of deal with the margin calls. I would make sure whatever you do, in my opinion, the best thing I could share with you is to make sure you are well diversified. Have to spread your money out. You cannot look at this like a horse race where you're betting on one horse. Silvergate Capital might be the horse that dies. And so what I would say to you, the best thing I can say to you is do what works best for you and just make sure you know what you're getting into. Silvergate is an iffy company right now. But there are some other companies out there that, that are not so iffy, that can also generate income. So you may want to spread out a little bit. That's what I'm doing. I don't think I'm going to double down on Silvergate just because the price went down. However, I might consider buying a few more shares just to see what happens. I know at the very least, I want to put just as much, if not more, energy into fortifying my portfolio before I go making money. The more I do this kind of thing, the more I'm learning that it's really worth it to take your extra cash and put that toward your put options so you can be protected against the downside. Montez is asking about Boyle. Yeah, Boyle is the leveraged ETF in the energy sector. I think Boyle is doing really well right now. Boyle is going way up. Yeah, Gene. That's my mindset, Gene, about Silvergate. I'm just thinking about the income, right? And if you notice, when the price goes down, that means that the put option or call options you sold last week are not going to get called. So you then can go back next week and sell similar call options at a lower strike price and make money again. Like, you can keep making money off this declining stock, but you have to be really thoughtful about it, because you don't want it to keep going down, down, down to the point it disappears. Most of the companies that go into this type of distress, they don't really disappear, right? That's what's interesting, right? So that concern, that fear of just the company dropping to nothing, I don't know. If you think about, I'm thinking about companies like Affirm that has been just a temper tantrum stock. It's been crazy. I would say the best way to deal with these crazy stocks is when they're doing good. It's like dealing with my teenage daughter. I know that when she's having a good day, I don't assume that that's the person she's always going to be. I know at some point she's going to have a bad day. She's going to come down, have an attitude, act a fool, get on my nerves, right? And I think that with these stocks, when you see them having a good day, when you see them trending up and it's green, 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 because as interest rates start to drop, or as inflation starts to get under control, and the long term, like the 10-year yield, stuff like that starts to drop, and people start taking on more risk, you're going to see some of these companies making insane amounts of money. They're just going to be, you're going to be mad that you didn't own more shares of them. But in the meantime, these companies are very temperamental. So that's why you get that extra income on the options, because there is a risk to even holding this asset, right? And so when they're doing well, don't get caught up in how much extra money you're going to make. Before you do that, consider fortifying your portfolio. Like, that means consider going to get your put options in place so that you can be protected, and especially from the disasters, right? That's what I'd say. So you think about a Silvergate. There was a time when the Silvergate was killing it. That stock was going up, up, up. I don't remember. I think it might have even been as high as 20 something per share or something. I think it's down to like 5 or something right now. But let me see here. Let me see where the Silvergate Capital stock. It's down to 534. What I'm gonna do is put a chart on the screen and show you what Silvergate. Whew, buddy. This company is a doozy, man. Oh my God, such an interesting case study. All right, so with Silvergate, here you see that if you go back 6 months, Silvergate's been as high as, oh my God, $80. Is that $80 or $97 a share? That's 6 months ago. If you go back, I don't know, 5 years or something, you see it hovering at 219. So this stock has gone crazy before, right? Before this week, where you had this bad news and you suddenly saw this major drop, which should very much concern you. You shouldn't just assume that this is automatically going to go away and it's going to be fine. It may not be. But here's the thing, right? If you go back, say, I don't know, a couple months ago, what is this? This is March. So let's go back to here, February 2nd, a month ago. The stock's trading at $20.97. So what I can tell you is this: if you were an owner of Silvergate at that time, which I was, the cost of like put options with a strike price to protect you, the cost of your insurance would have been extremely low. Like, you could have bought put options with a strike of maybe 10 or 9 for almost nothing. And so if you have 1,000 shares, you could buy 1,000 puts that protect you against an economic disaster. Then at that point, you could focus on the secondary goal, which is to generate income from that stock. Now, if you try to do that now, though, it's too late. It's almost too late. Now you can't buy that put with a strike of 9 or 10 without paying an insane amount of money. So I would encourage you, whatever you do when you're investing, is always be cautiously optimistic. Like, always remember all the possibilities that can occur if you invest consistently and all the money that you can make, but never forget to protect yourself because things can always go bad. That's the nature of investing. That's why a lot of people are afraid to invest, because they're afraid of losing money. Now, here's the other thing. This is why investing is something that you want to do. Why it's silly not to invest is, think about this. If you don't invest your money, what are you going to do with it? Well, you're going to spend it, right? And so let's say you compare investing in a stock, and let's say the stock drops 50%, but at least 5 years later, you still got half your money that you put to the side. Well, if you spend your money, then 5 years later, how much money are you going to have to show for it 5 years later? Zero. Nothing. Spending is the worst investment you can ever make 9 times out of 10, because you're literally 9 times out of 10, you're buying something that will hold zero value for you 5 years down the line. So even a horrible stock is a better investment, a better use of your money than just spending your money. Okay. Let's see here. Oh, you got an error message at support. Okay. Let me check into that, Jan. I appreciate you telling me that. Let me see here. Interesting. Okay, I got to look into that, Jan. Thank you. I didn't know about that technical issue. I'm going to talk to my team about that right now. So thank you for telling me about that. Yeah, we do have a great support team, and I didn't know that there was an email issue right now. So literally after we get done with class, I'm going to go and talk to them about that right at the moment. So, all right, so let me answer a couple more of your questions, and we'll bounce on out for today. By the way, if you want to come to LA, feel free to go to boycewatkins.com and just look for the Black Wealth Bootcamp, and you can join us. It's going to be a 2-day deep dive. We're going to cover in my book, The 10 Commandments of Black Economic Power. I will give you exercises. You will walk out of there knowing how to create your own economy. That's going to be one of the things that you'll learn sort of as you walk away, and you'll have a blueprint on kind of how to implement these ideas and how to build the generational wealth that your family deserves. All right, so let me look here. Steve is asking, what are call options? Call options are, Steve, you know what? I would encourage you to kind of look into call options and kind of learn how they work. But generally, the call option gives you the ability to participate in the upside of the stock without buying the stock. A call option is what they call a derivative security. That means that this is an asset you can buy that derives its value from the movement of the stock. So people buy call options a lot of times, maybe because they want to speculate, or they want to buy into a company and benefit from the rise of the company's stock, but they don't want to pay the whole stock price. So that's pretty much what a call option kind of lets you do. If you want to learn more about options, I have a whole masterclass on it. Feel free to go take a look. It's stockoptionsmasterclass.com. I know a lot of people love it. I think we surveyed, and 97% of you said you'd recommend it to a friend. So feel free to go to stockoptionsmasterclass.com. Okay, guys. All right. So we're here for almost an hour, and I saw some of your issues with the tech support. So I'm going to go and find out what's going on with that, because that is something that I need to know. So I thank you all for telling me that. I'm going to talk to the team about that now. In terms of a replay, every single class session that we have is stored. If you log in at theblackstockmarketprogram.com, theblackstockmarketprogram.com, you have access to all of that. And also later on today, I'll put a list of what Dr. Boyce is buying, some stocks that I actually like, for the next 3 to 5 years. Remember, all these investments are 3 to 5 year investments. These are not quick flips. These are not, easy money, fast money scenarios. These are slow money scenarios, but you'll find that slow money is the best money. All right. So let me see here. All right. So let me put this down here, and I'm going to get in touch with the team right now to kind of talk about that tech support issue. I apologize for that. We will fix that. We take pride in our customer support. How often does Prime Class meet, and what time of day? We meet about once every 2 weeks. We typically meet about 8 o'clock on a Thursday. And also every class session is recorded. So if you logged in at drboyceprime.com, Prime stands for Passive Recurring Income Machine. The number one goal is to use stock options to generate income and to look at different strategies that allow you to do that. But you also have access, to a lot of bonus material like the Stock Options Masterclass, a lot of information in terms of stock market investing in general, and even financial therapy. Like all these things are available to you. So feel free to go take a look and go to drboyceprime.com and go through all the details and stuff like that. And what happens also is you get on a text list where I text you guys and let you guys know positions that I'm taking, changes that I'm making, things that I'm seeing in the market. And so like I sent you all a text message this morning, I think you should have gotten it. It was actually about Silvergate Capital in terms of what I'm seeing and where the opportunities might be. So anyway, all right, so let me get out of here. I hope you have a good day, and I'm going to go and handle that situation with the tech support, because I did not know that was happening. So thank you for telling me that, Jan. I appreciate that. All right, everybody, have a good day.